The stock market has been out of control recently. In the midst of a global pandemic, we have seen the markets hit an all-time high, as well as some questionable gambling strategies on some stocks that have surged over 1000%. So this begs the question, is now a good time to invest in shares? Hey guys, my name is Michael and I'm an accountant from Australia. On this channel, we talk about money and finances so that we can all live more fulfilled lives together. Recently, I've had a lot of questions from friends asking me, is now a good time to start investing in shares? So I thought in this video, we'll just go over a couple of points to consider. So the old notion of buy low, sell high. What about stocks for the long run? And I'm just going to give you a quick strategy at the end to mitigate any risks to do with stock investing. So the old notion with investing and any sort of finances is buy low, sell high. And it's sound advice. And especially given that the stock market is at all-time highs, why would you start buying shares now? The stock market goes up and downs in a wave, also known as the market cycle. Benjamin Graham, who's sort of thought of the godfather of value investing, coined the term unsustainable optimism and unjustified pessimism. And these are the tops and the bottoms of the market cycle, where at the bottom, the stock market is full of fear and everything's bad and there's blood on the streets. And then at the top of the cycle is known as the unsustainable optimism, where everything's going well, everyone's making money. And this is where people are greedy and wanting to buy. So at the moment, with the stock market at all-time highs, why on earth would you start buying shares now? Especially when everyone knows buy low, sell high. Well, I want to introduce to you this idea that stocks are for the long run. Well, I want to remind you that stocks are not short-term investments. They should be seen as long-term investments. And I actually like to say that stocks are for the long run. And so this idea is that the risk of holding stocks diminishes the longer time that you hold it for. I wanted to prove to myself that the longer that you hold a stock, the less risk there is. So I downloaded data from Yahoo Finance and I collated the last 100 years of the stock market data. And what I did was I tallied up the return that you'd get depending on how long you held your investment for. So if you only held it for 3 months, 6 months, 1 year, all the way up to 30 years. And I looked at the likelihood of you making a positive return dependent on how long you held your stocks for. And what I found was that there was about a 70% chance that you'd make money if you only held the shares for 1 year. However, the longer you held it for, there was a high percentage that you would have a positive return. In fact, if you held your shares for at least 25 years, there has not been a single instance in the past where you have lost money. So if you held your shares for at least 25 years, at any time within the last century, you would have made money. There hasn't been an instance in the data that I used where you would lose money over 25 years. So this sort of says, it doesn't matter where in the market cycle that you buy, if you hold the shares for long enough, you will make a return. So even if you buy right now at the all-time market high, it doesn't matter in 30 years time, in 50 years time, which is when you want to be thinking about using your shares, you would have made money. You don't want shares to be a 5-year investment. It's too risky, too volatile in the short term. I'm reading this book called 50 Years in the Making by Morgan Housel. It's just a small little book, and he's sort of reflecting on the 2008 recession that we had. And in that book, he has this really nice quote that I like, talking about stocks for the long run. And he says, $1 invested in 1802 would be worth more than $700,000 today, adjusted for inflation. The same dollar in bonds would be worth less than $1,500. In gold, the same dollar would be $4. In a dollar kept under your mattress, it's about 5 cents. Over 2 centuries, there is no substitute for stocks. And I really like this because he is thinking about stocks for the long run. It's not a short-term thing. He's talking about over 2 centuries. The risk is mitigated the longer you hold your shares. And that brings me to the final point I want to make in this video. It's just a quick little strategy I want to share with you guys to be able to mitigate your risk as much as possible, no matter when you buy in the market cycle. And this is called dollar cost averaging. I'm sure you've heard of it. It's sort of the rage at the moment. It's all about buying shares consistently in regular time blocks. If you're just a beginner investor, this is the greatest strategy that you could follow. It will guarantee you to be a millionaire in the long run if you follow the strategy. If you're just beginning and you're not really sure what you're doing, you shouldn't be trying to time the market. You shouldn't be trying to buy the dips. You shouldn't be trying to do all that sort of jazz. You should just be doing the most simple strategy that will guarantee you results, which is buying the market monthly via low-cost index funds. If you're just a beginner and don't want to spend hours and hours every single week keeping track of individual stocks and companies and earnings reports, please just follow this simple strategy, which can be summarized in 9 little words. Buy the market monthly via low-cost index funds. That's it. Every single month, just put your money into an indice, and over time, you're just going to approximate the returns of the share market, which over the last century and a bit has been 7 to 10%. And that's beating inflation, that's beating bonds, that's beating everything else in the long run. And by buying index funds, you're buying into the world's greatest businesses, run by the world's smartest managers, backed by the world's smartest investors. So you're in pretty good company. Thank you so much for watching, guys. If you enjoyed this video, please leave a comment below. I get back to every single comment. I love having discussions with you guys. And if you want to see more videos like this, please also consider subscribing.